Yo, 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 we are live on YouTube. We are back. Financial Blueprint, Antoine Smalls. Man, I'm so thankful for you guys to be here today. So thankful that I am back live on YouTube today. This week has been a tough week for me. I was sick for for about 3 or 4 days. We had some family stuff going on. Really took my time away from doing some of the things that we schedulally been doing over the last few weeks. So I am happy to be back today, feeling a lot better as we continue to do a stock market news live this week. It is a packed show this week as we continue to pour into you with the information, the knowledge, the guidance, and the wisdom. So today, we had some breaking news when it comes to our stock market has dipped tremendously today due to some geopolitical issues between China and the United States. As we know previously, Donald Trump has threatened tariffs on China and other countries. We have an update on that. We also are going to talk about the government shutdown today as the government shutdown continues to progress and some of the fallouts and some of the effects that we've seen over the last week or so as the government continues to be shut down and how that affects federal employees as well as military personnel. We have the one and only Jensen Huang, NVIDIA's CEO, spoke, and we're going to break down AI and artificial intelligence as well as the stock market when it comes to the stock of NVIDIA, what I would call the greatest company in the world currently right now. And then we just got a quick update of how the stock market has been affected by everything, what we're looking to buy currently, and ultimately what is the look into earnings that starts next week for banks and how that can impact the market as a whole going into the fourth quarter. So let's get started. So we're going to start off with the government shutdown and how that has affected some essential exempted workers in the federal workforce, and then also how that affects the stock market, and if also how that affects military personnel and their paychecks. Let's go into um, TSA specifically right now.
If you have a flight to catch, you just might feel the impact of the government shutdown as it enters its 10th day. The FAA expects nearly 52,000 flights today as we head into a holiday weekend, and we've seen some sporadic delays and cancellations so far. The Trump administration has begun showing a video at 8 airports nationwide, in fact, and in it, Department of Homeland Security Secretary Kristi Noem blames Democrats for the shutdown and its impact on travelers. CBS News senior transportation correspondent Chris Van Cleve joins us now live from Los Angeles, typically a busy airport there. Chris, good morning. How does the overall national travel picture look today?
Well, something interesting here, Errol. Shortly before the checkpoint opened, a little bit before 4 a.m. local time, there's a large group of people that are waiting. Today, they treated the TSA to a round of applause before the checkpoint opened for those folks coming to work, not knowing when their next full paycheck will come. National air picture today looks a little messy. You got a lot of potential weather disruptions on the East Coast and even in places like Phoenix that are going to see some rain. And on top of that, you have uncertainty that's been injected into basically everyone's travels because of the staffing situation that we're seeing pop up sporadically throughout the air traffic control system. It doesn't look like it's a coordinated or targeted like sick out per se, but you're seeing more sick calls than you would normally see. And so every day, particularly as we get into the afternoon and evening hours, multiple FAA facilities have what are called staffing triggers, where they are short-staffed, basically. And some of those don't result in a whole lot of disruption. And then we've seen others that have been pretty disruptive. If you were trying to go to Nashville on Tuesday, you likely got there a couple of hours late because there just weren't enough air traffic controllers working.
So this is very important because we're going through this government shutdown, and there are a lot of people that are federal employees with different agencies that have been exempted from a furlough. So they technically have to come to work every day, but they're not getting paid for that as of right now. They're going to end up getting back pay once the shutdown is over. But just imagine you having been told to come to work, but you're not getting a paycheck. So what people are doing is they're calling out sick. They're using their PTO. They are finding ways to get around the system that's been telling them that they have to come to work but not getting a paycheck is unacceptable across the board. As someone that's a civilian government employee and I got furloughed, to be told that you got to come into work every day and not get a paycheck is crazy. So what people are doing is, as you can see here, it's affecting the flights and delays when it comes to the FAA. TSA workers, FAA workers are ultimately saying, okay, I'm gonna just use my PTO. I'm gonna use my sick days, and you know, ultimately, I'm gonna get paid for those sick days, but I'm not showing up, traveling, commuting, doing all of those things, and then also not getting a paycheck coming up in about a week.
You've got applause in the early morning hours for people at the TSA area in LA. And now you've got also criticism from the transportation secretary toward air traffic controllers who he says are abusing their sick time and their call out time. He's threatening, in fact, to fire them. Help us understand that.
Yeah, I was thinking the applause were for us, but they weren't. So Secretary Duffy, what
right,
he
Chris?
said was... That's what I like to think so.
Right.
But the TSA folks certainly deserve a round of applause, particularly at this hour. But what Secretary Duffy said was basically, if you're found to be violating FAA sick leave policy, there are repercussions for that. And the union acknowledges there are practices and procedures for dealing with abuse of the sick leave policy. Secretary Duffy said if they find out that you're taking advantage or misusing the sick leave policy, that your job could be at risk. And that is certainly a change in the tone of what the secretary has been saying. But you're also seeing these persistent sick calls. And the secretary made the point that on average, FAA staffing issues are responsible for about 5% of flight delays on average. At points this week, they've been responsible for more than 50%. So while delays and cancellations have been sort of within historic norms this week, and the vast majority of flights are leaving on time, the amount of delays because of air traffic control staffing is up. That Nashville example, the airport pointed out nearly 40,000 flyers were inconvenienced because of delays at that airport. Wow. So it's not nothing, even if the vast majority of air traffic controllers are working.
So we have to be honest here. Most people, if they're not getting paid, is not showing up to work. Most people are not just going to work for free. Now, your argument can be made that, hey, you're gonna get a check, you're gonna get back pay, and that's true. However, if you're living paycheck to paycheck, which most Americans are, and you are looking for that next check, which is the 15th of the month, to be able to pay your bills, your credit cards, your electricity bill, and utilities, things like that, how can you justify me showing up to work first? I have to use expenses to get to work, gas, tolls, maintenance on my car. I got to eat, lunch, whatever daily expenses that looks like for people. I'm using those daily expenses. I'm going to work. I'm not getting paid for it on my next check. So why wouldn't I just use PTO? Now, the leave policy for federal workers is, in my experience, leave policy is very, very lenient from the standpoint that I can take off practically whenever I want, unless there's a project or a task that I need to complete when it comes to my job. But for the most part, there is really no real limitations on how much sick leave or annual leave I can take off as long as I get a supervisor to say that's okay. So federal workers right now having to deal with the fact that they have to come to work and not get paid is a big issue, and it's causing delays when it comes to the airlines, and it's causing issues when it comes to airports and flights in general, right? But this is not just the end of the issue. The longer we continue with this government shutdown, the more this becomes a problem. And I said this on the 1st or the 2nd of October. On the 15th, when people don't get paid, it's going to be a problem. It's one thing when you're going through negotiations from a political perspective and Democrats and Republicans can't agree on a bill and all of that type of stuff. But when you have federal employees, TSA workers, exempted employees that not getting paid, and they got their daily, their weekly and monthly expenses to pay for, That's a big issue. And a bigger issue, and I'm not saying this is bigger than federal civilians, but military personnel also may not get paid. And that's a problem, right? So you have military personnel that's overseas. You have military personnel that's within the United States, active duty for all branches. It's an issue when we talk about military personnel not getting paid, and Speaker Johnson is going to address that now, and we're going to take a look at the continued issues of a government shutdown as it continues to progress forward.
Us now tonight from Washington is the Speaker of the House, Mike Johnson, a Republican from the great state of Louisiana. Speaker Johnson, we thank you for joining us here and taking time to speak with us. Listen, I give you credit for coming out here. You've been doing numerous interviews on every network, including ours, and you took that call from that military family. That can't be easy to hear those types of calls. I do want to start with the issue of military pay. NBC News has reporting from two sources that during a call with congressional Republicans, you rejected the idea of doing a standalone bill for military pay. What do you say to military families who are incredibly worried about not getting that next paycheck? Why wouldn't you at least try to get a standalone bill together?
Well, I tell them that we're worried about they're not getting paid as well, and that's why we already voted to pay the troops. We did that 3 weeks ago almost, September 19th. The continuing resolution that all the Republicans voted for was to keep the government open, to keep military families paid, to keep their veterans' health services going, to keep the Border Patrol and TSA agents and air traffic controllers and everybody else paid at their current levels. Every Democrat in the House of Representatives, except one, voted to close the government down and to stop their pay. Their concern is not with Republicans. We did that job. It has been sitting on the desk of Chuck Schumer and the Senate Democrats. We passed it out of the House. The ball is in the Senate's court right now, and that's why I'm insisting that they get to work and they open the government so that our troops can be paid.
Speaking of 3 weeks ago, Speaker Johnson, a very prominent member of your Republican caucus, Marjorie Taylor Greene of Georgia, has been critical of you for not bringing the House back into session. Why shouldn't they come back to work on this?
Because the House did its job. Marjorie's critical of me all the time for all sorts of things, okay? The House did its work. We sent the bill over. We passed a clean continuing resolution. What that means for the folks back home is it's a simple stopgap funding measure to keep the lights on, to keep government operating so that we can finish the federal budgeting to spend the taxpayers' dollars wisely. That was Republicans and Democrats that decided upon the date. We just needed 7 more weeks. I sent over there a clean CR for the Senate to do its work. And by the way, Senator Schumer and the Democrat senators who have now voted 7 times to close the government and cause all this harm voted for the same CR as recently as March. Chuck Schumer was the champion for passing it just 7 months ago.
So the big point here is we got to understand what he's saying. So the news reporter is asking, why hasn't a separate bill been passed for military personnel to be paid while the government is shut down? That was the question. Speaker Johnson spoke to the CR that Democrats and Republicans at times will approve, which is a continued resolution bill that basically keeps the government open while they continue to negotiate. We've seen a CR being done like consistently over the last 2 years, as the previous administration was in office and in the previous administration before Joe Biden. So we've seen a CR been passed in the government consistently, right? For the first time, the Democrats and the Republicans could not come to a agreement on a CR and a funding bill ultimately to fund the government, which is why we are in a government shutdown. Speaker Johnson is saying that, hey, the CR that we were trying to get approved included military personnel and federal workers to be paid while we're continuing to negotiate. He's, in a sense, this is the political talk. He's saying that we did have this in there, but the Democrats did not want to approve the CR, and they wanted to basically shut the government down. So it's a continued blame game between the two parties. One party is saying that the funding bill is not bipartisan. It does not include some things that we need from a Democratic side. The Republicans is saying, we gave you a great bill. We also gave you an opportunity to approve a CR so we can continue to keep the government open and fund the continued employees for federal workers to get paid. Y'all didn't want to do either, right? Which is how we are in this current situation right now as military workers as well as federal workers not getting paid in this upcoming check, which is next week.
Identical product, he's saying no now.
Explain it to our viewers, though, but why shouldn't they be there working for their constituents there in Washington? Why send them home? Couldn't you guys get some work done, number one? And number two, is this just a political play not to give Democrats any type of momentum?
No, this is House Republicans are doing a huge amount of work. We had a conference call today assessing all of that. They're in their districts right now. What they're doing is helping their constituents navigate the harms that have been caused by the Democrats who are playing political games here and closing the government. Again, they voted 7 times to shut the government down. So our members are in their districts helping, for example, their rural hospitals navigate to get the funding. Republicans passed $50 billion to prop up rural hospitals to support the health care of their constituents. And Chuck Schumer's counterproposal is to claw that back and not spend it. There is really important work being done right now, and we'll get back to regular session as soon as the Senate votes to turn the lights back on.
All right. The Democrats are refusing to vote for the spending bill in the Senate because they want to extend enhanced Obamacare subsidies that expire at the end of the year. And yet a survey by the nonpartisan health policy research group KFF found that 78% of adults believe those enhanced subsidies should be extended. That includes 82% of independents and roughly 6 in 10 Republicans. The Constitution requires compromise between legislators, and Americans support what they're asking for. So I guess, Speaker Johnson, my question to you, why not give it to them? And I got to ask, you're a year away from the midterms. Are you starting to sweat this?
No one has made a decision on those subsidies. There's a lot of reforms, probably 100 different ideas on how to improve it. The reason that Obamacare is having to be subsidized is because premiums have gone through the roof. When Obamacare was passed in 2010, they promised that the cost of care would go down. It's risen 60% since that time. There are a lot of ideas on how to reform it and make it better, but you said the key phrase, end of the year. That is a December 31st policy decision. It had nothing to do with keeping the government open on September 30th, the end of the fiscal year, so that Republicans and Democrats can be here to have those debates and figure out how to resolve it. They're not telling the American people the truth. What is a simple truth here is that Republicans have now voted repeatedly to keep the government open, and the Democrats have voted repeatedly to shut it down. They're trying to make a political moment out of this at the expense of real people back home that are being hurt.
So in one sense, he's absolutely right. He's saying that we could have had a CR approved, which a CR is a continued resolution to keep the government open while we continue to negotiate some of the healthcare and some of the issues when it comes to premiums and Obamacare and things like that towards the end of the calendar year versus the end of the fiscal government year. Two totally different things. The fiscal government year ends September 30th. The calendar year, as we know, ends in December 31st, right? So he's saying that we had more time to get the premium issues that in December 31st, the calendar year, we didn't have to shut the government down to be able to fix those issues now because we still have some months. That's a fact. And we've seen the CR pass, like he said, 7 times in the past, but this time the Democrats were not in agreement for the CR or the funding bill as a whole.
And do your job, I would say to the Senate Democrats.
Let's talk about those comments that Senate Minority Leader Chuck Schumer made, telling Punchbowl News that every day the shutdown continues gets better for Democrats. He said he was talking about their health care argument. How do you respond to that?
Yeah, clean up on aisle 5. Chuck Schumer told you exactly what he thinks. He's doing this for his own benefit. He is afraid he's going to get a challenge from the Marxist left in his party. Remember, he's a senator from New York. New York is about to elect a Marxist, the mayor of New York City. He is terrified that he's going to get a challenge to his left flank and he's going to lose his seat. He's been in Congress for 44 years. So he made a calculation. He cannot take the heat from the left of his party, and he decided to pull this political stunt for that reason. One reason alone. Everybody in Washington knows that's what's going on here. And it is infuriating to us that they're using the American people as pawns in this game.
We've done the right
thing. We've done the easy thing, and it should happen again.
I want to play you something President Trump said just today about cuts he may make during the shutdown. Let's take a listen.
We'll be making cuts that will be permanent, and we're only going to cut Democrat programs. I hate to tell you, I guess that makes sense, but we're only cutting Democrat programs.
So, Speaker Johnson, these are programs that may impact real Americans. Are you comfortable with the president cutting them along purely partisan lines?
The president has a responsibility to prioritize, triage effectively federal spending. Chuck Schumer decided to turn off the streams of federal funding. So now the administration has to look at that with their own lens and determine which services, policies, and personnel are essential and which are not. They have no choice in the matter. They take no pleasure in that. In fact, I was in the Oval Office with President Trump just a little over a week ago. Chuck Schumer, Hakeem Jeffries are there, Leader Thune. President Trump pleaded with Chuck Schumer not to play games and not to close the government because none of us want this to happen. He chose the opposite route. And so he has put the president in the position where he has to make those tough choices.
Well, President
Chuck
Trump,
Schumer is the one that can open the government and stop this.
Speaking of choices the president may make, he has said he's open to permanently laying off or firing some of these federal workers that have been furloughed. Who is the president talking about here? Can you explain that to our viewers?
I don't know. I haven't spoken to him about those details. I do know that he's getting a collection of legal analysis from attorneys who are trying to determine what the law fully provides and how much back pay is provided. But I can tell you where the president's heart is.
Wait, Speaker, but do you support the president firing furloughed workers?
I support, look, we're limited government conservatives, and there is too much inefficiency in the federal government. It's too large. It does too many things. There are programs that probably should be eliminated, but we want federal employees to be protected. I believe we have always followed the tradition. I think it's the law that the furloughed employees of the federal government because of a shutdown should be given back pay. I think that's what's going to happen here. The president doesn't want a single American employee to be harmed. There are good, patriotic people who serve the government, provide all these services for the people, but he has to make decisions about which are the most essential and which are the least essential. And that would be on any president of any party in a situation like this. It's totally unnecessary.
I hear you on the back pay part. It sounds like you want them to follow the law to the letter there to get the back pay because that's what the law calls for. But about firing furloughed workers, the Wall Street Journal right now has an exclusive report that Senator Thune has lobbied the White House to stop talking about that is not helping the process. Do you agree with Senator Thune on this?
I haven't talked to Senator Thune about that issue. I'm telling you what my position is, and I think this is very unfortunate. I think Chuck Schumer holds the keys to the kingdom here. I think that he could get at least 5 Senate Democrats to come to their senses and do the right thing, to do what they have always done in the past until they wanted to oppose President Trump. Do the right thing by the people. Put your politics aside. Let's everybody get back to work here.
So let's back up for a second. Just remember, right, as we reported last week, the funding bill vote needs 60 votes, right? There are 53 Republicans, right? And they need a total of 60 votes. 52 of the 60 are in agreement, which is one Republican is not in agreement of the funding bill. 52 out of the 53 Republicans are. They are in need of 8 Democratic votes to pass the funding bill to get the government reopened. They have currently 3 Democrats that have moved over to the side to fund the government so that the government shutdown ends. They are still in need of 5 more Democrats. So what Speaker Johnson is saying is, hey, we have a bill that we have on the table. We have done the work. We also have a CR that we can agree upon to open the government, and we can continue to negotiate until we, agree on, our issues. We need 5 more votes from the Democrats to be able to take this all out. No more federal government shutdown. We can do a CR like we've done 7 times prior, and we can get people back to work, and we can also pay our military families and our federal employees and TSA, FAA, as well as all of the federal agencies. The Democrats are not agreeing to that at all. And that is where we currently stand when it comes to the government shutdown, right? So as we move forward in this conversation, it's important for us to know the details, to know the information, because then we can, see the things for what they are. We can see the politics happening in real time from both sides, right? And then our president is then using all of this as a negotiation tactic and trying to pull leverage from possibly firing federal furlough workers and other cutting government other government agencies while he has the executive power to do so due to a government shutdown, right? So we got all of these different agendas happening all at the same time, and we have military families, federal workers, TSA workers, FAA workers that have to, some people have to go to work and not get a paycheck in 5 days. And I'm telling you, next week, as we continue to report on this government shutdown, it's going to be hell on earth when the 15th come and we got military families, federal workers that have to go to work that are not getting paid.
Speaker Johnson, if the politics is the reason, right, and say Democrats are holding out for this, are you worried that this is going to scar you going into the midterms? Again, we're just a year out from Americans going back to vote for the House.
Not at all, because the truth is a very powerful thing. And as John Adams said, facts are stubborn things. Everyone will look back on this and analyze what happened. Republicans did the good faith thing, the right thing by the people, and voted to keep the government open. And the Democrats voted over and over to shut it down, period, end of story. That's what's happening here.
Yeah, you know, the House can be a complicated place. There's so many laws there. Things are kind of strange for people who don't follow it day to day. For our viewers here, Speaker Johnson, explain this one to us, right? I want to ask you about the Arizona Democrat, Adelita Grijalva, who was elected to fill her late father's seat in Congress last month. You've not set a date to swear her in just yet, saying she was elected after the House was out of session, but she's been elected. Why not get her sworn in?
Because we're not in session because Chuck Schumer shut down the government. Okay, we had a special exception here a couple of months ago where we had 2 Florida representatives elected in a special election like that one, and we did administer the oath to them in a pro forma session, which is a session where basically no one's here. But the reason we did that, very different situation, is because they had a date specified and scheduled. They brought in all their family and friends and supporters, and they were the ones here. So as a courtesy to them, we went ahead and administered the oath. Representative-elect Grijalva is a very different situation. She just won her special election after the House was out of session.
But I just want to
all right, so that's not really important to the discussion that we currently are having. So it's important that we understand the current situation with the federal government, how that's then impacting families, loved ones, right? We got soldiers that are deployed overseas that are not getting paid. We have active duty members and border security workers that's continuing to work every day that's not going to ultimately receive paychecks in 5 days, right? We have exempted employees federally that have to go to work, TSA workers, right? And what they're doing is they're just saying, you know what, I'm not coming to work. I'm going to just use my sick time. I'm going to use my PTO. I'm going to use my vacation time. I'm not coming to work, which then impacts our flights and our our airlines and our airports, right? So this continued government issue between 2 parties is now starting to affect other agencies, which will then impact also military and our continued government workers. So we will continue to report on this issue going into next week as federal employees don't get paid. And we're going to, continue to tackle this when it comes to the shutdown and when it's ultimately going to end. I do think it will end soon. Once I believe when federal employees and government workers, as well as military, do not get a paycheck, I think it's going to be really difficult for some of these politicians as they get prepared for the midterm elections that's coming up very soon. And they will be looking for votes and looking for support for their constituents as well as outside. And they will, basically get on board and get a CR passed or a complete funding bill passed, right? So moving forward, right, we have the NVIDIA CEO Jensen Huang. I call it the best, by far the best company in the world, the best CEO in the world, live and ultimately telling you everything about artificial intelligence, about the chip sector, technology, and quantum computing moving forward. It is very, very much a blessing to have this man talking about all things AI and all things technology, and ultimately how that impacts your stock market portfolio moving forward over the next 5 to 10 years.
CEO of NVIDIA It's got a market cap of $4.5 trillion, makes it the world's most valuable company. And Jensen, it is a pleasure to have you here on set.
So happy to be here. Nice to see you.
Not as happy as we are. Thank you for coming in today. It's great to see you.
Thank you.
There are so many things that I'd like to talk to you about because it seems like every day there is this huge fire hydrant of news that's all about AI. And your company is at the center of most of that news. So if you don't mind, maybe we can just run through some of these headlines and you can explain what's happening from your perspective.
I'd love to.
Okay, let's start with the deal that you cut first with OpenAI that you've talked a lot about, that was then followed up by this deal earlier this week with AMD and OpenAI. It's got a lot of people trying to figure out what the dynamics are of this industry. What do you think about it? Did you know about that deal before it was announced?
Not really, but our deal is very different than theirs. We've been working with OpenAI through Azure, Microsoft, and OCI, and CoreWeave, and so through third parties for quite a long time. In fact, in 2016, I delivered the world's very first AI supercomputer called DGX-1 to a startup, a nonprofit startup in San Francisco, and that company turned out to have been OpenAI. And so we've been working with them for quite a long time. The OpenAI partnership is an addition to what we're already doing with them on the cloud. All of the cloud contracts, we're going to continue to execute on all that. But our partnership with them is quite unique in the sense that this is the first time we're going to sell directly to them. Until now, we've been largely selling, we've been only selling through the clouds. And so we're going to keep doing that. But the thing that's really exciting is that now, by selling directly to them, we could help prepare them for a day when they're self-hosted hyperscaler. And our agreement basically entails us selling entire systems and infrastructure to them. We're the only company in the world today that really focuses on building the entire AI infrastructure, from CPUs to GPUs to networking chips and switches of all kinds and all the software stacks that go along with that. And so we're quite a unique partner for them to be able to do this.
So partnerships, right? Business deals means everything in the current state of where we are in our technology, as well as AI and our investments, right? We are moving into the conversation about money right now, right? OpenAI, what is OpenAI? OpenAI is the company that basically is the owner of and the software when it comes to the application of ChatGPT, right? If you didn't know, OpenAI is ChatGPT, and it runs ChatGPT, which is mostly known as the most popular artificial intelligence application in the world, and it's not close. OpenAI is a private company. It's not a publicly traded company yet, right? We're looking at maybe a 2 to 3 year runway for OpenAI to become public. But right now, OpenAI is building out a support, manufacturer, and supply base to power ChatGPT and the new products ultimately in the future for the company before they go public, right? So NVIDIA, right, providing the chips, the AI build out, as Jensen Huang talked about, to OpenAI is a massive situation and a massive deal when it comes to how you should look at investing and ultimately artificial intelligence over the next 10 years, right? So all of the news that you see with NVIDIA, AMD, OpenAI, SoftBank, you see, what you need capacity wise for energy, for electricity, data centers and all of these things with Microsoft and everything we have going on should tell you how you should be investing ultimately over the next 10 years, and then who you should be invested in also.
I guess the question becomes, it's great for you to sell directly to them, but they don't have the money to buy it at this point. Is that why the deal was structured the way it is, where you'll get a stake in OpenAI over time?
They don't have the money yet.
Yeah.
And the way that it's going to happen, for every gigawatt of AI factories, you're probably going to need about $50 to $60 billion for the land-powered shell and all the computing and networking and all that, everything that goes along with that. And they're going to have to raise that money through, first of all, the revenues, which is growing exponentially, equity or debt. and they gave us the opportunity to invest alongside other investors when the time comes. And so it's not something we have to do, but it's something that they're giving us the opportunity to do, and I would love to do. One of the things that we did, we invested in OpenAI early on. My only regret is that we didn't invest more. I mean, this is the most profitable, the most valuable startup company ever. And so this is a great opportunity.
You mentioned that your deal is very different from AMD's. AMD is in a situation where they're basically giving away a big chunk of their company to be able to be a partner with OpenAI and sell them some of their goods. Is that how you read it?
Yeah, I saw the deal. It's imaginative. It's unique and surprising. Considering they were so excited about their next generation product, I'm surprised that they would give away 10% of the company before they even built it. And so, anyhow, it's clever, I guess.
Yeah, I wondered the same thing. And Lisa Su, who, by the way, is a distant cousin of yours,
yeah,
right?
she's terrific.
At AMD.
Yeah, she's terrific.
The way they've set this up, though, of giving it away, they're also making some big assumptions that their chips are going to be able to compete with your chips that are coming out down the road. Do you think?
So let's take a look at these deals, right? And this is OpenAI's deal spree that they have been on a tear since the beginning of October, right? So you have AMD, which is another chip supplier, right? When it comes to CPUs for OpenAI, right? 6 gigawatts up to 10% stake. So OpenAI is getting a 10% stake into AMD in the company, which is what Jensen is basically talking about. The difference between the NVIDIA deal and the AMD deal is they're not getting a stake in NVIDIA specifically. They're actually paying NVIDIA for NVIDIA's build out when it comes to the chips, right? You have a Stargate partnership that was announced on October 1st, and you have the Oracle SoftBank partnership also that was announced in September, which is basically data centers. I think that was out in Texas, I believe, for the build out for data centers in Texas as they continue to build out the manufacturer and infrastructure for artificial intelligence moving forward. And then you have the NVIDIA deal also that we just spoke about. So OpenAI has been on a tear when it comes to doing deals, doing partnerships, getting in the bag, making sure that they have the right, people around them, the right suppliers, infrastructures, cloud, everything. And we're going to talk energy. We've talked energy in the past. We're going to talk energy in a second. But this is so important to your investment portfolio, how you need to be investing, and ultimately what you need to do moving forward. And when you think about artificial intelligence and AI.
I think that's the case.
Well, our chips are quite special, and we're running really fast. We're the only company in the world today that builds all of the chips inside an AI infrastructure. And today, back when we first started, 5 years ago even, an Ampere chip or a Hopper chip is just one chip. Today, if you want to build one of these AI supercomputers, it takes a whole bunch of different types of chips to get the performance out of it because, Moore's law, the transistor itself is really slowing down. And we want to create those X factors of performance increase every single year. And we're delivering these new systems every single year. And every year it's multiple times faster than the last generation. In order for us to do that, we have to optimize the entire AI infrastructure. That supercomputer is the most complex computer the world's ever made. And we optimize across all of that, design new chips every year. So one chip alone is not probably going to be able to deliver the type of results we do. And but anyways, they're a really good company and we take them very seriously. And we're just going to have to keep running fast.
Let's talk about vendor financing, because that has been something that has raised a lot of questions on Wall Street since you cut this deal with OpenAI. Yesterday, Bloomberg is reporting that you have a $2 billion in financing that you're going to be involved with XAI to help them with these same stories. But this idea of circular financing, your customers can't afford to buy these chips yet, so you're going to help them out with money along the way. That leads some people to think back to what happened with companies during the big buildup like a Lucent or a Nortel in the early days. Is this different, and if so, how?
Well, first of all, XAI, I'm super excited about the financing opportunity that they're doing. If the only regret I have about XAI, we're an investor already. The only regret I have is I didn't give him more money. You know, almost everything that Elon's part of, you really want to be part of as well. And he gave us the opportunity to invest in XAI. I'm just delighted by that. And so that's an investment into a really great future company, and I'm really excited about that. That's not vendor financing per se, but what's going on in the world versus what happened in 2000 is just dramatically different. You know, back then, as you recall, there were pets.com, hospitals.com, and all of the internet companies combined was what, $30-40 billion in size. If you look at the hyperscalers now, that's where the first tranche of AI infrastructure is building. If you look at the AI, the hyperscalers have about $2.5 trillion of business that's already operating today. That business, that $2.5 trillion business, and the capex that goes underneath that is about, call it $500 billion. That transition from a classical CPU-based computing to now generative AI computing powered by GPUs, that transition is just starting. So we've got to build into $500 billion worth of capacity infrastructure that's already naturally growing by itself. And we're in the beginning phases of that. If you just look at NVIDIA's AI infrastructure business, you know, call it a couple of $100 billion so far, we're a couple of $100 billion into a multi-trillion dollar build out. So that's number one. The second part of it that's really unique is that we have a new generation of AI companies. The new AI companies like OpenAI and Anthropic and XAI and companies that are, well, you know, Thinking Machine Labs from Mira and Ilya Sutskever's SSI and Misha's company Reflection. And I mean, there's a whole bunch of amazing AI model builders now. This generation of AI model builders, what's happened in the last several months, a transition happened that is really, really important. For the last several years, they've been generating tokens, you know, these AI tokens, basically at a loss. And the reason for that is because the early AI models they were super interesting, really captivated a lot of attention, but they weren't useful enough to pay for. The last several months, it's been very clear that the new technology is now reasoning, it's doing research. Before it answers a question, it goes on the web and studies other PDFs and websites. It can now use tools, generate information for you, and it creates responses that are really useful. I use it every day to the point where now the tokens are profitable.
The question, though, is who is going to continue to pay for that build out? Is it the big companies like a Procter and Gamble? Is it consumers who are going to do this? I mean, my doctor showed me the AI that he's using, and it's incredibly helpful, but there's still a question about whether he's going to pay for it or the company he works for.
What I believe is so important here is a lot of people talk about the AI bubble, and they try to bring the .com bubble that happened in 2000 and, you know, late 90s, 1999, 2000, 2001, that the stock market, it was a bubble. You know, all of these .coms, yahoo.com, you know, yeah, all of these .coms, and it basically tanked because it wasn't as efficient or effective as people thought it was, right? So they're trying to compare now to what happened in the .com bubble. Now, I do believe there is an AI bubble that will happen over the next, let's say, 2 years from now. Let's say 2027. But are we currently in that right now? No. If you pay attention to CapEx, we pay attention to market cap of these companies, we pay attention to the continued build out and the infrastructure that need to be built for all of these businesses to do the amount of AI and capacity that they need to progress forward over the next 10 years. The CapEx number is so large, right? He just talked about $500 billion, right? For a build out for data centers, energy, cloud computing, memory, cooling when it comes to data centers, electricity, solar, nuclear energy. There's so much that's included in this that you have so much money being passed from company to business to this company to that company, to where over the next 2 years, the build out for artificial intelligence is going to be so massive that these companies are making so much money. However, This is the issue. They will have to then show that they're making the money to combat the profits and the revenue ultimately in the capex that they're going to have to put out for the build out. Now, when does that happen? That's probably not going to happen in 26. Now, will it have to be then forecasted to show in 27? The answer is probably yes. So if you are investing in companies today, you don't need to worry about a bubble right now. You don't necessarily need to worry about a bubble in next year, but you do have to start being concerned with the forecast of earnings in 26 going into 27, because then it's going to tell you, okay, is these companies that spend all this money on artificial intelligence going to start making profits off of it, or was this all a farce and all of this money when it comes to debt, using debt to put into investments, or using other people's money to put into investments? Ultimately, in the end, they have to show revenue and profits for the build out, but that's not going to be required until 27. So I wouldn't worry about an AI bubble right now, but going into the end of 26, end of next year, going into 27, that is really when the concern starts when it comes to if artificial intelligence is worth all of this money, and if these businesses ultimately in the end will continue to drive revenue and drive profits moving forward.
Going to pay for it.
Well, hopefully both. I think there's the consumer part of it. You know, a lot of OpenAI customers are consumers and they're paying for it. But the thing that's really cool is that the enterprise AI build out that's happening now, my favorite enterprise AI service is Cursor. Cursor is an AI coder. And every one of our engineers, 100%, is now assisted by AI coders. And our productivity has gone up incredibly. And so you're now seeing enterprise AI companies like Cursor, Open Evidence, I love Lovable. All of these companies are some of the fastest growing companies in the world, and they address enterprise. And so enterprise AI is here.
I wonder how you think about, Jensen, the ultimate destination where all this is actually building toward. I don't know, there was a post from David Connie, a Sequoia partner, this week saying, look, AGI is the only thing that can justify the volumes of capital spending right now, artificial general intelligence. At the same time, many of the model builders and experts are pushing out the date where that maybe is going to be achievable. Meantime, you're talking about annual generations of chips. How fast do they depreciate? We're putting all this capital in these data centers that it's just not clear, like, when we get to the end, or is it just a treadmill?
We are going to have incredibly profitable and incredibly useful AIs long before AGI. Mm-hmm. And for example, right now, Cursor AI. Yeah. You know, Cursor's AI software coder is incredibly useful. All of our engineers use it. We have some 40,000 engineers. Almost every one of them are going to use it, and they're loving it. And so
they're using it instead of something else, presumably, right? So these are displacing things.
Yeah, they're not. This is a brand new thing.
Yeah.
Remember, AI, unlike previous technologies are tools that humans use. Excel is a tool that humans use. A web browser is a tool that humans use. For the very first time, we have technology that can actually use tools by itself. And so Cursor uses, Visual C++, and and now we have Gemini agents that are able to use the browser and browse for groceries or destinations, or book travel for you, and it can use tools by itself. So this is really quite an extraordinary thing. The tool industry is a few $1 trillion.
Yeah.
Tool user industry is $100 trillion, which is the reason why everybody's so excited about the future of technology, because it can augment labor, it can increase the productivity of labor, and here at NVIDIA, it's increased our productivity tremendously.
So increase the productivity of labor and to combat labor at the same time. Hey, so what does that mean? We talk about how AI can then take your job, right? If I got an employee base of 100 people, and AI can basically make one person more efficient, by then also taking, let's say, 25% of the people, of the labor out of the workforce. So if I only need 75 people to work for my company, by then making them more, efficient by utilizing artificial intelligence, then why do I need a total of 100 people? This is the issue, though, is we're going to see companies lay off workers because artificial intelligence can do your job. And this is also part of the dialogue and the conversation that we need to have, right? Because if we don't have it, then people are going to be surprised that they just get laid off because AI then took your job. When people speak, you got to understand what they're saying and ultimately what they're really coming from when they say certain things. And that's in his situation. What he's saying is, yeah, sure, it's going to be more productive for you to be a better worker because you're going to utilize AI. But also at the same time, it might take some jobs for some people if AI can do it for you.
Already said you wish you could have bought more OpenAI and maybe invested more in XAI at this point. That implies that you don't think that this is all redundant. Because a lot of the players, I mean, if I read what Sam Altman says and the message he tries to convey, it's as if they're sprinting to try to stay ahead of everybody else because they think it's not going to be room for everybody necessarily who's trying to do something similar.
I think there's general intelligence and I think there's specialized intelligence.
Yeah.
We love general. When I hire engineers, I like them to be generally intelligent, and that's a great thing. But once they come to NVIDIA, we make them highly specialized intelligent, so that they could build things that NVIDIA needs. And so I think the idea of specialized intelligence versus generalized intelligence will continue to happen. And where the real value for enterprises and companies are is specialized intelligence, and where the value for consumers, general intelligence.
Hey, Jensen, let's talk a little bit about capital allocation and how do you see that? Just back to those same points that you wish you had more invested in OpenAI, you wish you had more invested in these other companies that you're kind of taking stakes in, like an XAI. You can do things with your money. You can choose to put it back into R&D. You probably don't need a ton with that right now. You can choose to build the company. You can choose to make acquisitions. You can choose to give shareholders back big dividends, or you can invest it yourself in other companies. And lately, what we've seen is a lot of investing in other companies. Do you have other deals like that planned in the works?
We're always looking for great startups to invest in. One of my favorite ones was CoreWeave.
Right.
My only regret is I didn't invest
Add that to the list.
enough. Yeah. And so in all of these investments that we've made recently, we've made some really terrific investments. And largely my only regret is that we didn't invest more. Because these are really special companies and they're part of our ecosystem, building out the AI infrastructure for the world. And AI is several things. AI is energy, AI is chips, the models, and the applications. And so you could see NVIDIA and you could look at me working across that entire stack of ecosystems around the world. And we need more energy, we need more chips, we need better models and more models, and we need a lot more applications.
So what of your cash flow that you kick off, and Mike, I knew you ran the numbers, what is it?
I was just looking at the consensus, like 240 billion in free cash flow this fiscal year and next is what is.
So that's a lot of cash that you can choose to set to work.
Mm-hmm.
Do you look for other investments within the AI infrastructure? Do you look for ways to build out extra energy? Do you look for somebody in quantum computing to get to the next thing that you could buy? What's in your brain at this point?
All of that. I'm excited about enterprise AI applications. And if I would have realized that the Cursor team was raising money before, I would have given them all my money. And so this is really terrific stuff. I'm excited about the work that Open Evidence is doing in helping digital nurses and digital with diagnosis. I'm excited about the work that Figure is doing in robotics. Wave is doing in self-driving cars. Wabi is doing in self-driving cars. Mm-hmm. And so there's just an incredibly large set of new companies that are enabled by this revolutionary technology called AI.
And that is the new investment that we need to take a look at and search for over the next, I would say, 3 to 6 months, right? What's the in the AI bubble, right? You had companies that went, bankrupt, that basically, stocks went crazy, and the productivity wasn't there, and ultimately in the end, it led to stock drawdowns, right? We will have the same thing over the next year or two when it comes to artificial intelligence, but the new companies that are being formed now, that are private, or that's a smaller, small cap, mid cap, company, they will then drive the future of artificial intelligence, and how all of these technologies, applications, software, etc., is going to build out what the new world looks like in our future, right? He just talked about automation when it came to self-driving cars. He talked about healthcare when it comes to diagnosing diseases, and how artificial intelligence can help the healthcare sector, and how that drives revenue ultimately moving forward, because we know that technology and healthcare are the two most important revenue drivers when it comes to the GDP of the United States, right? So how can we find that new upcoming company that is a possible 10 bagger, 15, 20 bagger when it comes to investing, right? Also, when it comes to your lifestyle, it is important that you utilize artificial intelligence on a daily basis when it comes to whatever you want to be more efficient in, and ultimately be smarter in, right? You can create so many different things for yourself personally, as well as for your businesses, if you use AI applications, AI tools, AI agents. Utilize the applications that you can utilize to make your life better long term. It is so important now that we're in a space that you can create a business and use artificial intelligence to work for you, and ultimately be a one person show, and drive revenue and drive your business forward without having to hire too many employees, right? So AI can be utilized in so many different ways. I just got a meal plan using artificial intelligence based on some of the changes I wanted to make when it comes to my diet, right? We talked about a workout plan when it came to trying to get into the gym and doing different workouts to become leaner and ultimately more ripped when it comes to my body, my physical fitness journey goals moving forward, right? Using AI to help me with YouTube, to help me with our real estate business, to help build out, architects and different blueprints for the house that we ultimately want to build over the next year. There's so many ways that you can utilize artificial intelligence, and I implore you, and I recommend that you do so, because if you don't, you're going to be left behind with just being being a person that don't want to use new technology. Similar to when the internet came out, and we started off with a new technology that most people didn't understand, but we see what the internet is now. We see what social media is now, and it is an amazing, amazing driver in our lifetime. So now we're moving into the stock market. It is the fourth quarter. The stock market was ripping, and we're going to get into the reason why it came down today. But let's talk about a stock market update. We have our guy, Tom Lee, talking about the bull run continues, and ultimately giving his end of year target and where the stock market should be to end the year.
I guess to our talk to the tape, the rally's road ahead. I mentioned that call from Tom Lee. He does join us now. He's a CNBC contributor. It's good to have you back. Welcome.
Great to see you, Scott.
So what do you make of just how the market's trading today? We've had a nice run. It's given a little bit back. Maybe some concerns are out there about the strength of the economy, the labor market, some other stuff. What do you see?
Well, I think markets are trying to balance a few things, because we are navigating a little blind because of the government shutdown. But we also know that the real powerful driver of the equity market and the economy has been AI, which is not affected by this slowdown. So I think stocks are in this sort of zigzag pattern, but given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000, it has been and we've seen it this week. These pullbacks get bought. So we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Are we whistling past the graveyard, Tom, on anything that could be concerning to you? I see a story right in front of me from Axios mentioning a Moody's analysis. 22 states are in recession or close to it. There was that Carlisle independent survey the other day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from the U.S. AI bubble. You mentioned the shutdown. Are we complacent towards any significant risks that we might be missing?
Well, I do think markets are less skeptical than they were in April and even in August and September. And we can see this in both positioning and AAII. So I think it is fair to say that the markets have priced in more good news. So like the things you flagged can be worrisome. But what I'd point out is that I think the AI story is actually strengthening, Scott. From our conversations with both companies and investors, it actually seems like the payback for AI, whether it's applications or services or companies' actual ROI, actually has improved in the last quarter or so. So I think that's what's helping actually create demand for spending. So I think we may be underestimating the sort of profit creation coming from AI. And I think that's why there's still legs to that story. But you're right. On balance, the data is mixed and we don't really know because we don't have government data.
Yeah. You gave our producers this line that you still think it's the, quote, most hated rally. And I've asked you about this every time you've been on with me. I feel like now that's a little bit far-fetched to suggest that this is still the most hated rally. I don't find anybody who comes on, certainly not on the programs that I do, that is overly negative about anything. The prevailing view, even from those who were cautious before, are like the stock market's going higher. Now, it may end poorly way down the road, but it's going higher. So how can you suggest that it's still so hated?
Well, there's this thing where people can make like a backhanded compliment. Like they might say something positive about the market, but they're really bearish. Because when I hear people say, oh, well, this reminds me of 1999, or, they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And I think, for me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
So Tom Lee gave a price target of 7,000 on the S&P for the end of the fiscal year. That is very, very bullish. He's continued to tell the AI story over the last year and a half. Tom Lee has been right. As much as we want to at times say that he's, very, very much optimistic, him and Dan Ives have been right when it comes to the stock market and its continued growth. And if the S&P continues to move at the pace that has been moving, 7,000 is not out of the question to end the year, and 7,900 going into the end of 26 is open to is on the table when it comes to the stock market, S&P 500, and the continued movement for artificial intelligence as well as technology companies moving forward, right? So that is the end of year target for Tom Lee, which is 7,000. Take that in consideration for your investment decisions. And let's go into our breaking news, which is President Trump has threatened massive continued tariffs and new tariffs on China due to the Chinese decision that was made yesterday based on raw materials and how that then affects the United States and our technology companies. Let's get into our president and how One Truth Social tweet and his statement caused a huge drop in the stock market today. Let's get into that right now.
On where we are here at the top of the hour, there's the NASDAQ down about 2%. We did reverse lower. By now, you know the headline that the president says the U.S. is calculating a massive increase of tariffs on China over rare earths. China put those new export controls on them. They escalated the trade fight. So that's where we are. It's Eamon Javers who brought us this headline within the last hour. We're going to go back to him now with breaking news for what he has learned here. Eamon.
Well, Scott, it was a fiery social media post just a short time ago from the president. This responding to the Chinese move to put export controls on rare earth minerals yesterday. That's seen as something of an aggressive move by the Chinese against U.S. technology supply chains. Here's what the president posted just a short time ago. He said, "I was to meet President Xi in 2 weeks at APEC in South Korea, but now there seems to be no reason to do so." He also writes, "Dependent on what China says about the hostile order that they have just put out, I will be forced as the president of the United States of America to financially counter their move. For every element that they have been able to monopolize, we have too." He goes on to threaten massive increases in tariffs here and says that the U.S. administration is considering what its moves might be. So no specific retaliation here yet, Scott. What we've got is a rhetorical firing up of the response from the president, threatening a number of actions, including canceling that summit between Trump and Xi Jinping that was expected to happen in South Korea. We don't know if that summit is now canceled or not canceled or what its status might be. We're trying to get that information from the White House right now. But clearly, tensions are much higher today than they were yesterday between the United States and China on the trade front. We'll see what specific moves come from this administration today, if they come at all today.
So we remember in April when Donald Trump put a ton of tariffs on all of the countries across the world. And it was what I would call a negotiation tactic to use leverage of the United States economy to create what he would call a fair trade world and trade deals across the world, right? So China, obviously being one of our, actually probably the biggest economic challenge when it comes to doing trade to and from China and the United States. China is using one of their monopolies, which is rare earth materials. Rare earth materials then impact the technology sector because that is utilized to build chips and other technology things that we need to be successful in the United States. So China is using their leverage to negotiate, in my opinion, tactic with the United States to, and their continued, trade discussions, to find a median compromise between the two countries, right? Our president using one tactic, which is tariffs and threatening of future, deals and issues when it comes to United States and trade with the Chinese, and Chinese using their monopoly when it comes to rare earth materials to do so also, right? So in my opinion, both countries are using leverage to try to negotiate for their trade deals and their future negotiations. And our president did not have a good response to the Chinese, and that provided and ultimately led to a sell-off today of the stock market. And currently, right now, the S&P went down over 2.5%, which is a significant amount in one day. It dropped from a high of 673 on the SPY, on the SPY, all the way down to 652 in one day. That's over, was that $21? Yep, about $21, which is a huge amount for an index for the total stock market. So due to, the possible issues when it comes to China continued tariffs being added onto between the two countries, and a possible trade deal war, which we've been in a trade war since April, that has caused a sell-off in the stock market today. It is a possible buying opportunity if you are an investor, but let's get more into the Trump statement and how that affects the Chinese and United States trade negotiations.
Yeah, Eamon, thank you very much. You keep us up to date. Eamon Javers at the Bureau in Washington for us. Certainly enough to make the market a little uneasy. And Rob, stand up and take notice. It's worth noting as well that prior to today, the S&P had gone 33 sessions without a 1% move. We obviously, for the moment, have that down 1.5%. And it's largely where you would probably expect to see the weakness within chips, NVIDIA, Broadcom, Micron, AMD, et cetera, and some other names that have what you would consider to be exposure to China. What do you think?
I think the sharp reaction to this news shows how price for perfection markets have become and how subject to a little bad news they could be. Markets were at 22.9 times as of yesterday. You've seen surging optimism looking at the AAII surveys, and the markets could potentially move in any risk from tariffs. Let's remember that China tariffs were already at 30%. And a massive increase would bring rates back up to levels that could be incredibly disruptive. The market is, high beta is underperforming today. It's down by 3.7%, where defensives are outperforming. You're seeing credit underperform. The reality is markets have become solely focused on the good news around AI, and they're ignoring any potential risks from the shutdown, incremental weakening in the labor market, and so you get a little piece of news that's unsettling, and you can see a shock like that.
There's definitely, Steph, I think to Rob's point, been a fair amount of complacency, certainly around the issue of trade and tariffs. Sure. We haven't mentioned those two T words in a long time because, as Rob said, we've been fixated on AI. We've been thinking about earnings and how good they're going to be and the fact that the Fed's cutting interest rates. But we're, certainly reminded right in our faces today that these issues still exist. An issue with the most, fierce competitor that we have, I think, globally on trade.
So we're only down 1.3% on this news. That, I think, is encouraging. And I think that is because if you step back, first and foremost, you have to assume that cooler heads will prevail. We have a little bit of time between now and when maybe Xi and Trump will meet. So we've got probably 2 weeks of noise. That's okay. We're looking for opportunities to be buying the noise because of all the things you just said. Better economic growth, decent consumer, AI renaissance, good earnings. Earnings are going to be very good. And the good news is on Tuesday, we start to get earnings. And which I think the banks are going to be very strong. And you're looking for opportunities, though. So to only be down 1.3% in the face of all of this, I think that's actually encouraging, and it speaks to people wanting to buy the dip. And I think that they will, and I think they should.
Well, I mean, it's been a pretty quick reversal as you're looking on the screen. Right now, it's 1.5%. I mean, there are significant questions, Jay, about kind of where we are. Not even outside of AI and the bubble question, which is being asked, every 5 minutes. Right. Obviously, where's the economy going? Bank of America data today shows what really looks to be two economies. Yep. To be quite honest, their data shows lower income consumer spending is growing at 0.6%. Higher income growing at 4 times that. So that's where the economy is being carried by the high-end consumer, and it's being carried by AI.
No doubt about it. I mean, it's definitely two tapes. It's fully bifurcated in terms of the high-end consumer versus the lower-end consumer. Top 10% represent 50% of spend. There's no doubt about that. And I think as it relates to what's going on today, this is an absolute buying opportunity from our vantage point. Why? Because GDP is at 3.8%. Yes, we are underway a cutting cycle. We'll see we've heard from Hawker today and some Fed speak this week. I think that will be stimulative to the economy. The big beautiful bill will start to run into play through the end of this year into next year, which I think will also be stimulative to the economy in the short run. And earnings, to Steph's point, we will start in earnest next week on Tuesday with financials, which we expect 12% earnings growth. So I like a lot of what's going on right now for the market. This is an opportunity for me. Mark.
I totally agree. Hey, if you are watching this right now, hit the subscribe button, like the video, like the live, hit the like button, and share this with someone that needs to hear it. We need to take a look at when we see big red, we need to be investing in the market. When you see big red in the market, you see dips like this, almost actually 2.5 percent, and the S&P as of right now, this video was 1.5%, but it went down officially over 2.5%. You need to be taking a look at the opportunities in the stock market and investing in the market. Today we bought a lot. I bought some more Microsoft. I bought some more option trades going into 2026, as well as a couple trades going into the end of the year. We don't look at red as a bad thing. We look at it as a cool off to where we can look at opportunities and stocks that we want at a lower price and ultimately make money over the next 3 to 6 to 12 months as we continue to pour in our money into the stock market and ultimately make money long term. Fear is something that emotionally people cannot get out of their own way when it comes to seeing red, and they see a little bit of money that's lost and they sell when they should be buying more and buying more and buying more. Right? So we got to look past the smoke, look past of all of the noise per se, and look at the facts. Show GDP is higher. Earnings start next week. We have banks that start showing earnings next week. We will see positive bank reports. Technology starts about a week after, so about 2 weeks. We have technology companies that do earnings, and we will see massive beats when it comes to earning estimates over the next 3 to 4 weeks as we get into earnings season that starts next week. So if we understand that the stock market moves on earnings, GDP growth, momentum, and continued beats, as well as forecasts going into next year. We know about our AI tech capex, and we've talked about the deals in the technology AI sector. We talked about the continued lowering of the federal interest rate over the next couple months. It's bull run time. Regardless of the shock that we had today, it is more opportunities to make a lot more money going into 26 and ultimately into 27.
It was primed anyway for some level of pullback. Whether this is the beginning of anything, who knows? We'll watch. Dow's down almost 600 points. I do think it speaks pretty loudly to the complacency that's been in the marketplace about almost anything outside of the positives to AI, rate cuts, the economy, and whatever else you want to throw into that basket.
During the entire opening of the show, you're the first person to mention rate cuts. And I feel like that's the thing that's in tandem with the AI enthusiasm is when you've got a rate cutting cycle, it's like, what else could the stock market wish for? So to Stephanie and Jason's point, if there's a pullback today, I think there's opportunity there. Kind of pivoting to what you say, Rob, if you look at 22 plus forward earnings, which for old people like us, like that's pretty out of control, but it's a handful of names that are buoying the entire markets. So if you lose the AI enthusiasm, Scott, or if the Fed backs off of the rate cuts, even more so than tariff talk, that could be the reset that I would be a little bit nervous about, where maybe instead of 22, you go down to 20, and now you're 600-700 points off the S&P.
Well, I mean, you're talking about a game changer scenario for the markets. Those are sort of dramatic risks that would be out there and that would have to roll for the market to have a significant problem. I mean, even with the pullback, we can look at NVIDIA. We're not that far away for $5 trillion in market cap. Now, this bit of upset is obviously front and center for us as we come on the air for you. So we're at 189. We need 205. So, maybe we get that in earnings, maybe we don't. But that's been one of the stories there. There's, Morgan Stanley positive on that name. AMD's best week since 2016. You've got the Qualcomm news that Mackenzie Sigalos was talking about earlier, where China opening this antitrust probe there. So there's just a lot of tension bubbling back over the surface as we see today. Rob, you have Qualcomm. Jason does too. I'm just curious, as you think about all this playing out, if the meeting between the president and President Xi wasn't supposed to be for a couple weeks. So if you get more rhetoric between the two sides, or at least from this end, what that might mean for the market as it looks ahead to a potential meeting between the two.
you make an important point. What is the breaking of the linkage that we've seen? The linkage between AI CapEx, equity markets, the U.S. consumer, and the U.S. economy. There's a positive and virtuous feedback loop going on. AI capital spend fuels earnings. Earnings fuel positive stock performance. Positive stock performance fuels the large, the wealthiest U.S. consumers that are exposed in the market, and that fuels the economy. So anytime you're going to see something that challenges the break in that link, it specifically challenges it in the areas that have done really well, although Qualcomm has lagged quite a bit because of its exposure to China. You're going to have a situation where you get a dramatic pullback, especially in the names that have participated quite a bit. So I don't think this is broken, but these links will become challenged from time to time. And as long as you think this is still in play, and we certainly do through year end, these pullbacks provide opportunities for investors that want to stay long to get in.
Market is moving.
This is very much the case when it comes to my stock portfolio. We continue to be invested into the market. We continue to invest money anytime we see dips, anytime we look at price levels that we like. We are always continuing to invest in the market, and I will recommend that you do the same. All right. So last but not least, we are talking about the stock market today, and our last video breaks down ultimately where we are. The market dipped today due to Trump's social media report based on what he said is the Chinese doing bad business when it comes to trade and possible tariffs being levied on them moving forward. So we had a dip in the market today. Let's go into the end of that and see where we currently are and how you should be investing moving into next week and ultimately to the end of the year.
So should you be buying this dip? Let's ask Steve Grasso. He's CEO of Grasso Global and a CNBC contributor. Thanks, Steve, so much for being here with us today. I mean, what do you think? This is quite a day, and there have been times when the markets have shrugged off some of these news about different tariffs or even other headlines about China. But today, maybe taking it a little bit more seriously because of the rare earths discussion, kind of ratcheted it up another level. What do you make?
So Court, I think all those points that you made are accurate. The problem, well, I should state that if you think about the best days in the market, they often come within a week of the worst days. And I would not say that this is a worst day for the market, right? We saw the tariff sell-off. We recovered from that. If you look at what really sends this market spiraling, it's China and it's the Fed. For me, I've been buying today. I buy on weakness. And if you look at how many times you bought on weakness, you were rewarded. What should you buy? What sold off the most?
Okay, so do you have any names in specific that you'd love to point us to? Take some action on your advice?
Yeah, so I have one that's sort of a hidden play. It's CCCX. It's actually a SPAC. No one's talked about SPACs in how many years, Court, right?
Yeah, it was all the rage, but what's a SPAC nowadays, right?
Exactly. So it's merging with inflection. It's a quantum name. Jumped. If you look at the chart, and it's jumped. So please be careful when you buy this stock. This is not for the faint of heart. I've been playing it. I'm long it. I've been trading it. Very volatile name, but it's been going up. So the volatility has worked for it, and I think it goes up dramatically higher from here. Having said that, drone companies, quantum companies, tech companies, buy them all because the market, it's a Friday.
Okay.
What does the market usually do on a Friday? It gives you a little bit of a sell-off because no one wants to go home long names over the weekend. I would suggest hold your nose, go home long.
Okay, so obviously you're talking about things that have seen a lot of runway recently. You talked about drones, but what about tech? What about AI? Those are some of the biggest sellers here today, some of the weakest names, both the NASDAQ overall, but also that tech sector specifically. We have some guests that are saying, don't be scared, just like you're saying. AI is still the trade. Nothing fundamentally has changed here. Even if there's an issue with rare earths, even if we get these tariffs on China, we can look through it. It hasn't fundamentally changed the story. What do you make of that? The tech group, the AI names, NVIDIA, for example, as it gets closer to 5 trillion?
Yeah, so I was a NVIDIA bull when NVIDIA was trading in the teens. I think NVIDIA, and I'm not breaking ground when I say this, many people think it's overextended. I think you should really segue out and expand out to a lot of the other names in the AI space, a lot of its competitors, a lot of the smaller names that haven't moved as much. I think NVIDIA really is sort of, I don't want to say it's at the end of its run because they're always able to pull something out of a hat with that name. But I would more apt be in other names, the smaller names, or even an AMD that's trying to play catch up with NVIDIA, or the Mag 7 names minus NVIDIA. I think all of them you could, because they're all trying to do what NVIDIA is doing. They're all trying to make their own chips. So I think AI is great, but Court, it's quantum is the next leg.
We talked about last week. I gave 3 stocks that I love that I've been invested in, and NVIDIA was one of them. Because NVIDIA is the largest weighted stock that I currently have in my portfolio. But I named Amazon as well as Meta, and Meta is a company that I've been investing a ton in. It got down in the high 600s and it's in the low 700s now. And we've done pretty well over the last week, and we continue to invest in it long term. It's not something that is a short term hold, right? So Meta is a great company to invest in. If you look at some of the other companies that he's talking about companies like CoreWeave. He's talking about Qualcomm. He's talking about AMD. Broadcom is a great name, which is on the screen right now. TSM is an amazing name. So if you're looking for some companies outside of NVIDIA that has the AI play, the semiconductors, as well as the future of quantum computing, you can definitely take a look at some of those other companies, right? So all in all, it's important that we understand that, buying on weakness is what he was saying. Buying when you see discounts when it comes to stocks, when you see stocks draw down based on anything other than fundamentals. If it's just bad news, if it's geopolitical, if it's the White House, if it's something that happens that causes the stock market to sell, there is a possibility and a good likelihood that the stocks will come back, roaring back shortly after. So it is an opportunity to buy at a discount, which is always a positive thing for your portfolio and ultimately making money long term, right? So today we had a discussion about the government shutdown, the continued government shutdown, how that has impacted TSA workers, FAA workers, federal employees, as well as military that are not getting paid as of next week, right? We had a long conversation with the CEO of NVIDIA. He broke down the AI infrastructure play and continued investments into different partnerships and companies. We had a discussion about our president and his comments on the Chinese and the rare earth materials. And last but not least, we talked about the stock market, where it currently is, the drawdown that it had today, and ultimately, should you be invested in and should you be buying into weakness, which the answer is absolutely yes. As I always say, man, invest, invest, invest. This is the channel that you come to when it comes to investment, information, financial blueprint, financial pillars. We talk about all things finance. Hit the like button. Continue to subscribe to the channel as we continue to build out this channel, as well as we continue to give out this good information and continue to help you on your financial journey moving forward. Right? I love you guys. I appreciate y'all. As I always say, it's Friday. Make sure you took some of your paycheck, if you got paid, put it towards investments, put money into your stock market portfolio, look at the crypto, buy assets, build businesses, buy real estate, buy gold, commodities, etc. Assets is the conversation that we have here on the Financial Blueprint channel. And as we continue to move forward, have a great weekend. I love you guys. I appreciate y'all. I'll be back live on YouTube on Tuesday as we continue our series on wealth, money, and riches. I love you guys. I appreciate y'all. I'm out. Antoine Smalls. Peace.